Okay, so I realize the standard messaging is to never give out your social insurance number to anybody. But there are some exceptions to that. Everyone's worried about fraud or identity theft, and you have to watch out for that, but there are some situations where you do need to provide your social insurance number, and one of them is getting a job. So when you are an employee, your employer is obligated to remit taxes to the government on your behalf. This is much more about directing the tax dollars to the right place rather than checking your eligibility to work in Canada. So as part of your onboarding with a new employer, they'll probably get you to fill out what's called a TD1 form. It's your basic info, name, date of birth, social insurance number, and there's a list of tax credits which may or may not apply to your situation. And the purpose of this form is so that your employer can take off the appropriate amount of tax from each paycheck. The top one is the basic personal amount, and often your employer will pre-fill this one out for you because everyone can claim the basic personal amount. For all the other credits, you have to read them to see if they apply to you and then fill out the appropriate box. These don't apply to most people. So the basic personal amount is in effect the income level you have to hit before you start paying taxes. And when you look into the calculations, actually it works out that you pay the tax at that first tax bracket rate, then an equivalent credit is given back to you. Which of course seems silly, but that's the way that Canada does it. This idea of a basic personal amount, for the amount that you're exempt from income tax, has been part of the income tax system in Canada since the very beginning in 1917. So what this ensures is the people with the lowest income don't pay any income tax at all. So this list of credits on your TD1 form are all non-refundable tax credits. I'll go into a different video talking about this versus what refundable tax credits are. So what happens if I don't fill this form out, or I never saw this form? Well, your employer might take off more tax than necessary. Tax time comes around, you file your taxes and realize that you paid too much tax for the whole year, and you generate a refund. For some reason, people seem to like doing this. They enjoy having this tax refund come back to them as if it's some bonus at the end of the year, when in reality, this is just money that was already yours that the CRA has been holding on to. For me personally, I'd rather have that money in advance. So my goal is to pay as little tax up front as possible. So I've been holding on to the CRA's money for the year instead of them holding on to mine.